How did auctions perform over the weekend?
Pretty well, Pete. According to CoreLogic, there was about 2,155 auctions held across Australia's capital cities over the weekend. Preliminary clearance rate about 74%, which is pretty high. Just the same weekend, though, a year ago, there was 3,200 auctions, about the same clearance rate as this weekend. But obviously, stock levels are still low, but they're getting better and better. And over the weekend, Melbourne overtook Sydney to be the biggest market for auctions. There were about 900 auctions in Melbourne. Clearance rate in Melbourne 72%, so pretty strong there. Sydney just under Melbourne's number, about 890 homes auctioned in Sydney. Clearance rate in Sydney is a little bit higher, about 77%. But it seems like the market is building up a bit more confidence as we head into Christmas, which is a good thing. All
right, Ed, tomorrow is the last Reserve Bank board meeting for the year. The central bank is expected to keep rates on hold.
They're expected to keep rates at 0.1% for probably the next 3 years. We should get an update from the governor tomorrow, just giving some commentary on Australia's economy and how it's been tracking. They may also provide an update on their bond buying program. They pledged to buy $100 billion worth of government bonds last month. They may give a little update on that, but wouldn't really expect too much from the Reserve Bank's board meeting tomorrow. It's their last meeting of the year. They'll resume again in February.
OK, and on Wednesday, the September quarter GDP numbers will be released. Economists are predicting Australia will lift itself out of recession.
Yeah, good thing. So I've seen a few different research notes so far. We've got Commonwealth Bank predicting GDP to rise by about 2% in the September quarter. This comes after a 7% quarter-on-quarter contraction in the June quarter. Obviously, the lockdown in Melbourne is something which has affected this third quarter result. So CBA believe it's about 2% growth. NAB are a bit more rosy. They're believing it's going to be 4.1%. They expect a sharp rise in GDP in the September quarter. But they do think the economy is going to remain at pre-COVID levels until the end of next year. That's when it's going to get back to beating its economic growth numbers of this year. And they do believe unemployment's going to remain high too. But it looks like it could be anywhere between 2 and 4% on Wednesday, the growth figure.
All right, Ed, just to wrap up, what's the local stock market expected to do today?
Up about 0.6%. We're on track for the best month since 1988. The market's up about 11.4% in November.
Are you expecting it to be a bit of a choppy ride for Treasury wines, given what's going on with the wine industry in China at the moment, Ed? It's in a trading halt at the moment. Is that going to be lifted today?
Look, it could be lifted today. They're obviously scrambling to figure out just how much of an impact these wine tariffs are going to have on their balance sheet. Their share price has been punished already this year when several of these wine-related announcements with China have come out. They're obviously going to be releasing an update either hopefully this morning. We'll get more of an understanding, but I expect their share price is going to fall pretty severely off the back of this.
Yeah, I would agree with you there.